Hey guys, how's it going today? I hope everybody did good. Ended the day on a positive note. Was another slow day for me on the day trading front. Um, and I really was my own worst enemy because I overtraded. And in short trader, you can't overtrade, and that's some people look at that and all the fees and stuff as a bad thing. But for me, starting out, it was good because it would stop you from overtrading. When you look at what you could have had versus what you have, had you not overtraded, it's gonna, force you to clean your trading up. So in a sense, it's a good thing. But, for me, trying to switch gears a little bit, it's something I'm gonna really have to get used to and really focus on, because I can feel myself trying to make something happen because I'm used to just rolling. But I got to look at what the market is doing now. Volume in the market is down a little bit this week because just like last week, it was a short week. You have people taking vacation that week. But the smart people will take that Friday off and then have this week as their vacation. So, I think these last 2 weeks have been a little slow, a little down on volume because this is one of those times. We're kind of in the lull time between when earnings kind of slows down and we're getting ready for the next earnings season to kick off. And we're just kind of in that lull. And I feel it's good because it teaches you to be patient. It really helps you to develop that patience you need to allow trades to work. And just sit back and watch it, because it doesn't really move very fast. They tend to move a little slow. You're able to absorb the price action. You're able to kind of watch time and sales. Watch what happens with time and sales in level 2 when it hits a supply zone. We're just using time and sales in level 2 to verify what we see on the chart, that we are hitting a supply zone. And we're just kind of getting an idea of how many traders are there based on the orders going through. And, and it's really good that we can do that, slow it down and take our time. But today I just overtraded a little bit and gave too much of my money back. And it's precious when you're trying to grow your account. That money is really it's really precious. So today SQ did hit our scanner, and it doesn't look like there was a gap here, but you can see we closed here, and then here was the gap. We opened up here, so we were actually opening over $1 higher than where we closed. So that's kind of giving us a little gap. We had a little volume, so I hit my scan. Now, if a stock doesn't hit my scans, it's not on my gap scans, it's not on my opening range scan, then I'm not touching it. And it's not to be ugly toward other people who are saying, hey, what about this? What about that? What about this? There could be good setups. But I got to where I am by focusing on the stocks that hit my scans and not chasing. Because every time I started chasing, it always ended up bad. I may have a good one here or there, but overall, it's a losing deal. So that's why I don't look at Twitter. I don't look at anything else other than my scans. And if it doesn't hit, then I don't trade it. And I just won't have a watch list that day. But, of course, and I think it might have been misunderstood yesterday that I only trade earnings, but that's not true. Earnings is my favorite catalyst. That's the one that I like to trade the most. But I will trade other catalysts. You know, it doesn't matter if the stock is gapping up or down, it's moving, and it has the right catalyst, then I'm going to trade it. You know, if it's a buyout, it's a confirmed buyout, the deal is done. No, I'm not trading it because it's probably going to go sideways. If it's a offering, then it's probably going to gap to wherever the offering price is and trade sideways. So I just don't trade those. But I do trade, you know, other catalysts. So whatever I feel is going to give me the move that I need, or the movement that I need in the stock, then that's what I'm going to do. Those are the stocks that I'm going to trade. So SQ did hit the scanner. It was the only one, and it actually hit late. But it was good that it did. And I was actually looking at this as maybe a potential, you know, long. Since we were open and gapped up, I'm thinking, you know, we may be recovering here. And we had a big window, you know, on up to 52. We had a pivot here, you know, but then we had the window up to 52. And, you know, I thought that would be pretty good. But it opened. And, you know, we ran up, but it opened and we sold off. Or we tried. Well, here's the opening candle. It got bought back up over this, and then it started to sell off. We just couldn't push up and make a new high. So once I saw that, I felt, okay, it's a short now. So I got in, you know, right below the opening range low. Now, I tried to get in with 200 shares, which I had, you know, plenty enough buying power to get 200 shares. But it rejected my order saying I didn't have enough buying power. So I got in, you know, with 100 shares. And, you know, evidently there might have been an issue with buying power at the open. I know the platform, you know, had the right buying power. So I didn't think there was an issue. But I'm not really sure. But I was only able to get in at 100 shares. And I was about 5 cents late getting in because of that. But I got in. And I know this is the 100-day here. I typically don't respect this on the initial move. On the initial sell-off, it typically sells through this pretty good. But when it comes back, that's when this comes into play. And so I got in. It looked pretty good. But then when we recovered here and then opened up here and started to push a little bit, I was like, oh. You know, here we go. You know, now it decides to respect the 100. But then we ended up selling back off. And we sold off down here. We got bought back up a little bit. And then sold off some more. And I just took it at this target here. This would have been my first cover with the 100 shares. And then I'd have been looking for this 50-day down here. Potentially for the next cover, or, you know, it getting through. It did get through. Really touched 47.20, but because I had this issue here, it started trading crazy. And I was only in 100 shares. I wasn't going to take 50 here and 50 here. I just took it all off here. I could have reset and re-engaged here, but I just lost confidence in this stock. With, you know, this choppiness that we were in. I just flat lost confidence in it. So I said I had to wait for it to bounce and really give me a move here. So I didn't want to get it here, and which was a smart thing because we were just chopping around. I waited for it to go back up and retest this. And here again, it tested the 100 this time, the VWAP. And once we came back down through that, once we got back red on the day, I went ahead and took it. Now, had we bounced here and started to push off, we would have made a higher low. I would have taken it right off. But, it worked. We got in. And here I had to hit my first target. This sold through real quick. This was a very quick move. My target was 47. And I think I got it at 47. And, this just sold through real quick and came right back up. It wasn't down here, but for less than 20 seconds, I guess. And instead of waiting for this to bounce, I got kind of iffy here. Got kind of shaky. Got in here and ended up getting stopped out. And I'm getting ready to hop in my car because I'm getting ready to come back from lunch. I'm monitoring this, at lunch. And instead of me just waiting, I'm like, I got to get in. I got to get in because I don't want to miss this move. So the fear of missing out gets in because I'm thinking on this rejection, we're going to wash through this. And there was a level down here at 46.44, I think, 46.43. You can't see it on this chart. We didn't have a range on this. But that was going to be my ultimate target. And so, sure enough, by the time I got home and cut this thing on, it just stopped me out. It had ran right up to this level and tapped it and stopped me out. And, even if I had gotten back in, there was no indication of me taking this. Now, I might have gotten it here, but then again, this never made a lower low relative to this candle. So this wouldn't have been an entry for me. This wouldn't have been an entry for me because even though we closed below this level, this candle never made a lower low and we recovered. Here, I got in. It was a little bit early, but, I had to hold through some stuff. I got in here, and as long as we didn't break this high, I was in. I had my stop set right up here at 47.60. And, finally made the move down. It washed through the level I wanted to get out at. And all the way down here to 46.80. So, I left about 20 cents on the table. But it's hitting my targets. And that's the discipline we've got to have. We've got to take it off when it hits our target. We're not trying to top and bottom tick these stocks. If we do, then it's going to end bad for us. So we have to pick our targets ahead of time, and we got to have the discipline to stick to our targets. Now, if we do our reflection and we're looking through our journals at the end of the day, then at the end of the week, and we start seeing that, okay, it's hitting our target, but it's going, twice as far. Or it's going another quarter of the way down before it's bouncing. It's hitting another target. Then we start looking at our trade plan and adjusting it, saying, okay, maybe our first targets are too tight. Let's go to the second target. And let's see how that works. But you got to have the data to support it. You just don't want to come in one day and change it because you think the pattern is changing. So the key is, and what we're trying to do when we're trading small, is not about the money that we're making. We're trying to develop the skill, the discipline that we're going to need. So when we start sizing up, the money's going to start rolling in. And we won't be worrying about money. We'll just be trading to hit our marks. And the money's just going to be there. So, excuse me, if you look at these trades, $100 here, well, I normally would trade this stock 500 shares. So today, I would have, probably 5 times the money, plus I'll be scaling out here. So I probably would have hit here, probably would have hit here, and then got stopped back out up here, and then re-engage doing the same thing. We make a lot more money by doing that. But in order to get to that point, number one, we got to learn how to make viable trade plans. Number two, we have to learn how to execute those trade plans. And if we can't execute, if we can't get in and hold to our first target and take it off, then we're not going to make money in the market. And it's just that simple. If we can't execute a simple trade plan, then there's no way we can go on and do something else. So here is, my day. And like I said, I gave back a lot of money. The trade, I should have had $184 a day. But only $84. But look at the commissions. On 10 tickets. $49.50. And, $4.49 per ticket. Then we got the ECN fees, the SEC, FIRNA. We got all of that. But, overtrading for me. This was overtrading. I didn't need to take these excess trades. And so take away 4 of these tickets and the loss that I shouldn't have taken, we've had a real good day. For a small account. For an $1,800 account, $180 is no joke. And doing that every day is, you're going to get to where you want to be. But that was it, for the day. It was all me, and the fear of missing out jumped in. I'm trying to really force the issue, and the market just wasn't having it. It just was not having it. All right, so let's take a look at Tesla. This was the all-day hold that we're looking at, first thing this morning. The stock was moving, it was gapping up, and I was looking long on this. We had a pivot here, and then we had, I felt we could get to 300 if this thing really took off. But at a minimum, we could close this little gap here. And that's what I was really looking for. I had my final target was just over this 275, that gap, and we just couldn't close it up. But you can see I was looking for it to make a run. We had a big gap up, and I thought we were gonna go. But again, I was it took a lot of work. But this is why I look at the 60-minute chart. When I'm, glancing back at this. I don't watch this all day. Once I set it and I set my stop, I'm done. Okay, I am done with this thing. And, in this case, just looking at it on a 2-minute candle, we never breached our technicals here. We dipped below it, but we never breached it. And, we made the move. So finally, it did hit my first target, up here through 271. And then my final target was through 275 to recover that gap. But we did have, the 100-day right here that it could actually run into. But it never did. Once we hit my target, we tried to push up a little bit, and then this thing sold off and ended up stopping me out. Now, the problem I had with this is after the first target hit, I had to come back and change my stop. And what I did was I put my stop in at 267.70, and then I was like, no, maybe 266 would be the best place for it. That was like another point. It's like maybe, looking at the chart, I was like, I think that would be better because it may need that room to pull back. And then I went to put my target out up here over 275. Well, I did that, and then I was supposed to take this 267.70 order off, but I accidentally took off the limit order I had for my target and didn't realize it. So when I came back, I was short 150 shares because I instead of taking the other stop loss off, I took the other limit. I took the target order off, and then it ended up hitting both of these. So it made me short. So as I'm doing this, it is at break even. So I may end up killing it tonight. Just depends on how it looks. Or I may hold it in the morning to see if we get a little gap down, and I could claim some first thing in the morning. But we'll see. But I booked, what I was gonna book today. 1077.26, and it's not bad. This is about half of what we've been getting off of these. Like this week is slow, and we're not getting the full moves on things. We're getting good moves, but we're not getting the full move. I'm not getting a complete follow through. So, but as long as we're making money and I'm not giving anything back, that's all that matters. But one thing about this strategy versus the regular day trading strategy, you have to really trust what you're doing. You have to really trust and believe in the setup, the strategy, and believe in your ability to identify these and make the right decisions. And without it, it's going to be hard to trade this, because you have to pretty much set it and forget it. Because if you sit here and watch this tick for tick, it can throw you out. More than likely, it will chop you out before it makes the move. And then you're going to be mad that you got out too early and you should have done this and that. You got to develop that trust. And that's where trading small helps you. It helps you develop trust in your system, in your strategy. Somebody, emailed me last night, saying, talking about only making $21 yesterday. I'm like, well, how much did you make last week? How much did you make? Yeah, you might have made $700 or $800 one day, but did you end the week red? Yeah. Okay, that's my point. If you can't be consistent, you need to go back to the basics, build your foundation. Because you will not believe how many people have gone back and have made like $20 one day, $70 one day, might have got $160 one day and back to $50. And at the end of the week, they've had their first first green week they've ever had since they've been trading. I'm like, okay, now you know how to make money. Just let's be consistent with it. And you get consistent with it, then you start increasing your share size. When you increase your share size, your profit increases. You don't change the way you trade. You trade the same way, but you're making more money. More position size equals more money. This stuff is scalable. It's very scalable, especially for an independent equities trader like us. It's very scalable. So you got to start, and you got to be okay with this. And I'm doing it. I'm modeling it. So you'll see, you've got to stick around and you've got to watch and see what happens over a period of time. That's what's going to tell the tale. You gotta have some resiliency. You gotta have some staying power. So, I was talking about the 5-minute chart on Tesla. Here's a 5-minute chart right here. This would have chopped you out if you'd have been trying to trade on a 5-minute chart. Look how smooth this is versus this. Okay. Little stress, much stress. Little stress, much stress. So now ask me, why do I like doing this? I can set it and forget it. And yeah, I'll lose, one trade here and there. Big deal. Losses are a part of trading. It's what it's all about. But if you have trust and you have a viable strategy, you're going to win more than you lose. And you're going to be smiling all the way to the bank. All the way to the bank. And believe me, I was smiling from ear to ear. Going to the... Well, I don't go to the bank. I just wire it to go straight there. But I was smiling from ear to ear doing those bank wires. And paying myself for the month. And believe me, that's a good feeling. Once you do it a couple of times, then you're going to do what it takes to make it happen for you every month. Week after week, day after day. All right, guys. So I'm going to get out of here. And I will be back with you tomorrow morning.